Hello, hello. Good afternoon. Hope you guys can hear me okay, see me alright. We're just having a chat just before the session in the chat box here. Thank you, Imad. Thank you, Kelvin. Good to see you guys back again. And for anyone who's new to the session, drop us a message. Put it into the chat. Say hi. Let me know where you're joining me from. We will give it a couple of minutes before we get started. And if you can, click that like button. It helps us a lot with the YouTube algorithm. Don't know how it does, but that's what I heard it does, so make sure you do that. Hey Dash, how you doing? Did I use 12? I know I did a Samsung Galaxy. Hey BL, how you doing? Hey Julian. Hey Tariq, good morning. Hi MAFX. How's Dubai? Good but sleepy. It is Monday. You got a Monday nightis. So it is Monday. You're allowed to be sleepy on Monday. I did do a quick scalp on gold. Nothing else. Just been a bit busy today, so haven't really jumped onto too many trades today. Did a quick one on gold, a quick one on the Aussie as well. I have, Imad, I have started phase 2. Not a great time. I can tell you that my phase 2 is not going as smoothly as phase 1 because I am focusing all of it on gold, and you can see that we'll go through it later as well, but you can see that gold hasn't really formed any clear directions. So it's been choppy, good results, bad results, mixed bag. But the good thing about phase 2 is that there's a long time, 60 days to hit 5%. So not stressed, just gonna give it some time, wait for a trend to form, and then start scalping it back again. Hey Jamilu, how you doing? Hey Simon, good to have you back again. I know it's been a while, but good to see you all. Anyone else? Anyone else doing phase 1 or phase 2? Or you've passed it already? Let me know. Peter, I am on the MFF. No recommendations, nothing of that sort, no solicitation. Just what I'm doing now. Very good, Imad. You're getting close. Very close. Hey Tom, how you doing? Do the rules change for how you must pass challenge? No, well, it changes a little bit. It does change a little bit. I'll get into the details. I can't get into the details on this session here today, but I might do a session on my own where we can get into the details about that. Hey Diana, how you doing? DXY not retirement, retracement on the H1. It is retracing. I'm looking for that bounce after completion of the retracement for that bounce back up. Hopefully. Or it could just go from a retracement to a correction towards the downside. Alrighty, should we get started? And those of you who are here, do me the big favor, click that like button and we shall get started. Great. I am doing great. I am here in this session. Couldn't be better. Well, could be better, but I'm super happy as well. Alright, let's get started. Thank you all for attending the session here today. IC Markets webinar. We are doing a live market analysis. What I'll be doing today, during this session, is I will be looking at the markets. I'll give you a quick review of what happened last week. We did have some big news last week, so I'll give you a quick review of what happened last week, how it moved prices. Then we'll look into what could happen this week, where prices could head towards, possible levels that I'm looking at, possible trade setups that I'm ranking quite high on my watch list. I'll be sharing that with you at any point in time. If you do have any trading related questions, please feel free to put it into the chat. Let me know. I'll be happy to address those questions. If you have any particular pairs that you would like me to look at, I can do that as well. Okay, and if you're new to the session, drop a message. We're all a very friendly bunch here. You can see we have a whole bunch of regulars. So we're a very friendly bunch here. Drop a message, say hi, let me know where you're joining us from. And for all the regulars, thank you for attending. Good to have you back again. So, before we get started, a quick disclaimer. Any information contained in this webinar should not be construed as advice and is presented as educational material only. International capital markets has not considered your objectives, financial situation, and needs, and you should consider its appropriateness for your circumstances. The contents of this webinar and any accompanying material are not intended to be a solicitation of funds or a recommendation to trade a financial product. You all know the drill, and you all know what I tend to do during these sessions. I do look at many different pairs, many possible setups. Those are my views of where I think prices could head towards. Please do not just copy every possible trade setups, because I can guarantee you that you will, one, be over trading, and two, you always want to look for do your own due diligence on any trade setups, and also make sure that it fits with your own trading methodology as well. All right, so those are the two rules that we have. Don't just jump into every trade blindly. Make sure it fits with your own trading method, and also please manage your risk in terms of leverage and margin, trade sizing, number of trades. Okay, a quick introduction of your host, myself. I'm pretty sure you all can do that already. My name is Jin Dao. Most of you know me as Jin or JD. I'm one of the investment analysts here at the Everest Fortune Group, award-winning research team, Technical Analyst Award finalist for Best FX and Equity Research 2019, 2020, and 2021. I used to previously help with managing a multi-million-dollar FX fund. I have been trading for 10 to 15 years now already. Been trading for a long time, a lot of hours and days and nights spent looking at the screen, looking at the candles. So I'll be happy to guide you through your own trading journey. All you have to do, reach out, ask a question. I'll be happy to guide you through that. All right. So again, thank you all for attending the session. Let's get started. So straight off, I see a few questions about the dollar index. The euro dollar, not bad, and would you be so kind? I will look at the euro dollar and the pound dollar as well, as the dollar index is going higher. I don't offer any signal service or copy trading. And what impacts gold markets? I haven't traded for years. Well, gold primarily the dollar index, the what's that called? The dollar index, and what I find is euro as well. Right? A lot of things affect gold, but primarily it will be the dollar index and also the euro dollar. All right, and then we will look at the CAD yen and the pound yen. So before all that, let's do a quick review of what has happened over the last week. So back to Monday last week, very quiet trading scenarios. Why so? Is because we had the bank holiday in the US and bank holiday in Canada. Prices pretty much set in consolidation, no big moves towards the upside or the downside. And you can see here this was because of President's Day in the US. So I'll skip through that. What we did see as a big surprise was last Tuesday, where we saw a lot of PMI data. PMI data being Purchasers Managers Index data. And you can see that if it's over 50, it shows an expansion of the sector, and if it's under 50, it shows a contraction of the sector, right? So the main thing to focus here was the pound, right? The pound's flash services PMI went from a 48.7. It was revised from 48, so it went from 48.7, expected 49.2. So it was expected to stay within that contraction phase. But what we actually had was a big push towards that 53.3 release, which shows services PMI or services sector in the UK going from a contraction to an expansion. Right? Big news, big shock there. And flash manufacturing PMI for the UK went from 47 to 49.2, very close towards that expansionary phase on the manufacturing PMI as well. So two big surprises here for the UK last week on Tuesday, manufacturing PMI and services PMI. If we looked at the pound dollar on the H1 time frame on Tuesday last week, this was as the news got released, right? So it started off at that 102 level. News got released, it pushed all the way up within the hour towards that 1.2113 level, right? So a big push towards upside, continued all the way up to that 1.2148 or almost 1.2150 resistance level. Okay, so that move higher was because of that surprise from the PMI data, manufacturing and services PMI for the UK. So that was that one, and then we did have this CPI data for Canada. Canadian CPI, inflationary data. Look, pay attention to the trim and also the median CPI because these are the year-on-year data. Year-on-year, obviously more impactful than the month-on-month. And what we saw here was it went from a 5.2, expected 4.9, came out at 5. Trimmed CPI went from 5.3, expected 5.2, came out at 5.1. All right, so basically what it's showing is that inflation growth in Canada is slowing down, right? Is slowing down from a 5.2 to a 5, from a 5.3 to a 5.1. It's slowing down. And with that news, right, if we see that inflation is slowing down, this means that the Bank of Canada might be achieving its aim of moving towards that 2 to 3% inflation target, right? Might be moving towards that target level, reducing the need for further interest rate increases from the Bank of Canada. So what happened there with the Canadian dollar, I'll move that away, was on, when was it? On Wednesday at 9:30. There we are. On Wednesday at 9:30, the news, before the news release, was at 1.3456. On the news release, it went up within the hour, and the next 2 hours went to that 1.3527 or 1.3530 level, right? Towards that recent high from the previous week at that 1.3535 level. So with the Bank of Canada, with pressures easing on the Bank of Canada for further rate increases, we saw that weakness come into play for the Canadian dollar, and that's why we saw the US CAD push towards upside on the release of this CPI data. Make sense so far? All good? All right, and then following on from that, we did have some services and manufacturing PMI for the US, which also supported the move, but not too much, because the big news here was the NZD, the Reserve Bank of New Zealand, this time increasing rates from a 4.25%, increasing by 50 basis points to a 4.75%, right? So a 50 basis point rate hike coming from the Reserve Bank of New Zealand. And also, if you paid attention to the rate statement, I'll bring that up. They expect the cash rate to peak at 5.5%. 5.5% is the target. So if we come back to this, it's currently at 4.75. So we're looking at possibly another 75 basis point rate hike to come from the RBNZ. This is another way of saying that we're anticipating further rate hikes. And because of that, what we actually saw on the Kiwi dollar, let me see where it is, on the Kiwi dollar on Wednesday, early morning, let me check, 9 a.m. on Wednesday morning, at about that time there, right? We saw, I'll zoom in a bit, you saw the Kiwi dollar push up, and then after that came back down and consolidated, right? We saw that first move towards upside because of the interest rate decision, because of the statement. But what actually happened, that dollar strength came back into play. You can see that it was an overall big downward move on the Kiwi dollar, so it failed to sustain the upside move. And also there was that near term resistance at about that 6259 level or 6260 level. So it came quite close, test that area, and then fell back down, got resisted along this area before it broke lower. Okay, so that was the RBNZ with the interest rate decision on Wednesday last week. On to Wednesday, late Wednesday or early Thursday morning FOMC meeting minutes. We did see a brief move on the dollar towards the upside because this one line. Because of this one line, nope, it's not here. Let me find that one line for you. Where is that one line? Okay, there we go. Because of that one line, almost all Fed officials backed a 25 pip hike last meeting. A few officials favored or could have backed a 50 basis point rate hike. That one line shows that we're possibly looking at a number of members who are quite hawkish in terms of increasing rates. It puts the idea that we could see further or more bullish rate hikes to come from the Fed Reserve. And because of that, what we actually saw on the dollar index on Thursday morning, where was it? Thursday morning there, we actually saw that big push, right from that 104.35 level straight up towards that 104.58, almost at 104.60. Why did it retrace back down? It's all because of that high that we saw on the 17th of Feb, where it hit that level and turned back down. Same thing happened. It hit that level and turned back down. All right. So as much as the news is important, as much as we can identify key lines or statements being hawkish or dovish, the technical play still comes very important. Where it comes to a round number level or resistance level, we're not going to anticipate that it breaks, it shoots up, hits that level, and turns back down through the rest of the period before trying to break up again. Okay, so that was the Fed FOMC meeting minutes as it was released. Bit of a surprise there. GDP number for the US going from a 2.9 to a 2.7. Small drop in the dollar, but not a big one because the main focus for last week, was on Friday. Right? How many of you traded this news event? On Friday evening, 9:30 GMT plus 8, the US Core PCE Price Index. Right? Core PCE Price Index, very important inflation number because it is the Fed Reserve's primary inflation measure. The Fed Reserves pay attention to this Core PCE Price Index, and you can see it went from, it was a 0.3, got revised up to a 0.4, and it got released at a 0.6. So it shows that inflation in the US, in terms of the Core PCE Price Index, actually went higher than expected, higher than forecast. Inflation growth still growing faster than expected. This straight away gives us the view, or gives the market the view, that we could anticipate further interest rate hikes to come from the Fed Reserve. All right, and because of this news, 9:30 Friday evening, hope you were not having drinks. 9:30 Friday evening, at that time, where was it? Right at that release, as price broke above that 104 105.80 level, we saw a big push towards 105.32. And that's where we are today, right? We saw the Fed Reserve, or anticipation that we might see further rate hikes to come from the Fed Reserve on the release of the core PCE price index. We saw price go from 104, about 104.90, just below 105, straight up towards that 105.30 level, and right now it's retracing back down again. Okay, so that was what happened last week. Big price movements, now retracing back down. I see this as a bit of a consolidation. Could break lower, but we're going to see whether it's going to bounce back up before we see further upside potential. Hey Fabio, how you doing? All right, and then any questions so far about what has happened through last week in terms of the review? All good, all good. Fantastic. Okay. So with that said, what could we look forward to for this week? Momentum on the dollar index is towards the upside, based on what we've just seen on the core PCE price index and also how price has been moving. So we are still looking for the upside move on the dollar index. Things to pay attention to on, well, today is pretty much done. We do have some core durable goods orders to be released, as well. I don't anticipate this to be big price movers at this point in time. What you want to pay attention to is any comments to come if you're trading on the yen pairs from the Bank of Japan Governor Designate Ueda. I hope I'm pronouncing it correct, as he speaks about his plans. We're going to have a new governor for the Bank of Japan. He's sharing his thoughts about the plans for his view of the monetary policy, right? So pay attention to that. We do have the CAD GDP to be released. Not a big change expected here, so I'm not anticipating big moves on the CAD at this point. This is going to be important, where we see the US consumer confidence looking to go from 107 to 108.5. So might see consumer confidence increasing, going to increase spending, might be a good push for the US economy. Big thing here is the Aussie with their CPI data on Wednesday morning, 1st of March. Can you believe it? We're in March already. So Aussie with their CPI data going from 8.4 to an 8.1. I am guessing, again, completely a guess, is that we might actually see this being higher than 8.1, possibly even higher than 8.4. The Reserve Bank of Australia has been quite hawkish about further rate increases. They have said that we might see further inflation data climbing towards upside. So I think this might be a little bit higher, which might see the Aussie dollar push a bit towards upside. Following from that, not a lot of other news, which clears up the week for more of a trending scenario. All right. So you can see that we don't have a lot of news here, which might make it a little bit easier in terms of possible trade setups, because we're not going to have disruptions, possible news disruptions. So we'll look into the charts from here. Okay. So looking at your questions, is it true Feb month end flow would move up dollar? Looks like it. I wouldn't say it's because of the month end. I view it as, with the way the dollar has been moving, most likely we're going to see that continuation towards upside. How many streams are there now per week, and when is that? I know that we do have a stream on Monday morning, early Monday morning, as a pre-week setup, right? Help you get ready for the week. We do have a live session here on Monday morning, and then we have a couple more subscribe to the channel. You get all the notifications when the stream comes around. All right, easier just to subscribe to the channel and get that. So answering the first question on the dollar index, you're more over the news than most people. Do you ever play breakouts on it? I do. I actually do at times. Well, quite often, I would say. I say at times, but it ends up to be quite often that I do try to anticipate the news. I look for possible quick breakouts following before the news. So I do set up orders, or I do try and get in before the news at times. Only if I get a relatively good sense of where I think prices could be heading towards. All right. I wouldn't recommend it to everyone. Because if you don't really know, then it would be a bit of a gamble. But I do consider the news, possible breakouts, key levels, price levels, and price movements as well before looking for that setups. All right. So I was just sharing this before on the dollar index. I can show you that I am looking for further upside. It is consolidating between that 105.33 and 105 level within that range. Why I think that it could move further up, we do have a big, strong upward trend line, possibly target level at a 105.80 level, right? 105.80. And I'll show you the last time we got to 105.80 was in December last year. The only key point you want to pay a bit more attention to, and I'll put that. Let me change that into a different style. Let's say dotted line there is at 105.54. Hey John, we start at 5:30 GMT plus 8. You can always catch the recap after we've ended and catch back on what you have missed, right? All good. All right, so I do think we might see some further upside on the dollar index towards that 105.80 level, possible hesitation at 105.55. Tariq, this is on the H4 time frame. So we're looking at this upward trend line supporting prices higher. I'm looking for it to test that 105.80 in the medium term, right? So long as it stays above 105. If it breaks down from 105, it could come down towards 104.80, but if it stays above this trend line, still towards upside. If it breaks this, then we might see some bigger correction downwards. Okay, so just watch out. Right now, let's see what happens. Looking like it's going to consolidate and then break towards the upside. Hope I answered your question there, Diana. Tariq. Okay. So now after looking at this on the dollar index consolidating, on the shorter term, it looks like it's pushing down, but I'm looking at it consolidating with some upside potential. Looking at the euro dollar, right? Euro dollar, I'll clear this out for now. You can see that we do have, again, that big downward trend line. It has found a very strong support level here at that 105. I would say 105.50. It's been consolidating within this range for today, right? Pretty much for today, consolidating at this level. The next key support level down on the euro dollar will be at that 104.82 or 83 level. Okay, so there's a next key support level here, swing low from the 6th of Jan. And then if I go further back, you also see that we do have another level here at about that 104.42. Okay, so what I'm looking for here on the euro dollar is possibly Price again moving very similar to the dollar index, where it's consolidating along this 105.50 level. If it does break towards the downside, I'll show it to you on the H1 time frame. Zooming in a little bit. So I've got the bottom of the range here at 105.33. I've got the top of the range here at about 105.60. It's within this range. Okay, and I'll show you again in a smaller time frame. We still have this strong downward trend line with all that downward pressure. With all that downward pressure, I'm anticipating that we're going to see this push lower. What needs to happen now? Two things. One, dollar index to trade higher, right? To break out of the consolidation we were just talking about, to trade higher. And then also for the euro dollar to break down from this 105.33 level towards the downside, towards that 104.82 level. Okay, so that's the view on the euro dollar. Looking at that downside potential. Possibly short term will be towards 105.33. Longer, bigger swing will be towards that 104.82 level. With that, then we look at the pound dollar, because Diana was asking about the euro dollar and the pound dollar. Pound dollar, same thing, found a very strong support here at that 1.192, about 1.1920 level. Right, 1.1920 level. Feb 17th came to this point, bounced strongly towards upside. Again, now touched that 1.1920 level and then bounced back up. But at this point, what I'm looking at is that 1.20 level forming a good strong resistance. Right, so I would say that we might see some upside, not looking for any upward trade or uptrend or any buying opportunities unless price breaks above 1.20. Unless price breaks above 1.20, like this bouncing up or breaking above, before we're going to see the upside. How I look at it is, 1.20. How I look at it is it might move up and trade towards the downside, or if we see the dollar strengthen earlier than anticipated, then we might see this trade back down towards 1.1920. Let me just try something out here. And you can also see why it's testing this level, because we do have that 23.6 as a fib level here where it's testing, possibly rejecting a little bit early to identify that point right now. Okay. Do you jump in when price breaks the level, or do you wait for some confirmation? When price breaks the level, I would actually, I wouldn't jump in straight away. I would wait for the candle to close. So it will be on the H1 candle. I'll wait for the candle to close. Typically, it will close, it will retrace slightly before I'll get in towards upside or towards the downside. So I do wait for a bit of a retracement, but sometimes it doesn't retrace. Most often, I do look at the candle to close as a breakout before I do get into a trade. Okay. Fantastic. US PMI from Wednesday and Friday could have big moves. US PMI on Wednesday and Friday, the thing why I didn't think it would have a big move, right? Here we are. Because when we saw the PMI, the flash PMI last week, it didn't have too big a move in terms of the US. And also you can see here that we're not anticipating any changes, or we're not anticipating big changes here. Unless we get a huge surprise, like, manufacturing PMI for the US going to over 50, then we might see that change. But if it stays at that 47.9 or it stays at that 48 level, I don't see a big price volatility for the manufacturing PMI and also the services PMI. Where are services? Services PMI there. Going from 55.2 to 54.4, it's actually pushing towards dropping back down again. So it's going to be a bit of a mix. I don't think it's going to have too big a price impact. All right. So that was pound. That was the pound. I will get to gold, one of my favorites now, so I will get there. Hang on, just give me a moment. With that, then we come to Tariq's question on the CAD yen and the pound yen. Let's look at that. First off, since I have pound yen here, look at the pound yen. I have a lot of scribbles. Let me just see what's happening. All right, so pound yen. I think I shared this with you guys back then, where I was very hawkish on the yen in general, or hawkish or dovish on the yen in general, anticipating that big push towards upside. So I was looking for price to break above this 162 level for that move towards 164.80, right? And we're seeing that move potentially forming up. We had that upward channel or upward trend line forming as price breaks towards the upside. Let's clear that out for now and start afresh. Key level here at 163.50. Let me just make it a bit better. 163.80, right? Found a key level at 163.80. This is on H4 time frame. Price the last time on Tuesday last week tested and retraced. So what we're looking for here is if price can break out or break above this 163.80 level to push towards the upside. If and drag this right across, you can see that 163.80. I'll put a range. I'll consider this as a bit of an area between 163.80 and 164. To be safer, I would say price needs to break above 164. If it breaks above 164, then we're going to see good upside potential on the pound yen, again back towards that previous swing level at 166.83. All right, so pound yen, if it breaks above 164, we could see this move towards 166.83. If it hits and reverses back down, I would say that firstly, don't be too tempted to enter any trades, because we do have this level forming a good strong support. So I think again looks very similar to what I was just talking about before. If it rejects 164, it'll come down, test, or could come down, test that trend line before pushing back up again. Okay, so we're looking for that break towards the upside on the pound yen. All good, Tariq? With that, looking at the CAD yen, very similar picture. Very similar picture where we see it right at that resistance of 100.30, about 100.30, looking for that break towards upside, but in this case, not a huge upward move, right? I'm not anticipating a huge upward move. We could see it break above and climb towards that recent swing or recent resistance levels. You can see if I drag this right across at 101.18 or 101.20. So some upward move on the CAD yen. For this to push higher, you're possibly going to have to see the Canadian dollar strengthen, right? Or massive weakening in the yen. Because the way we were just looking at the US CAD, it is pushing towards upside. We are looking at the dollar strength. We are looking at the Canadian weakness. So if the CAD yen, oops, I lost my chart. If the CAD yen does have to push up, then it's going to be weakness on the yen most likely weakness on the yen driving prices higher rather than the strength of the CAD. Not ruling it out, but I think more likely we're going to see it driven up because of weakness on the yen. All good, Tariq? Good. Now I've answered that question there. Let me see. Did I miss anyone else? Dollar index, and now for AFC on gold. Let me just do this. Let me add to my watch list. Yes, okay. Done. So gold. Right, so gold, I was just looking at this big downward. This is on H4 time frame again. Big downward pressure applied from that big trend line towards the downside, resisting any upward moves, right? We've seen it test, try to break higher, got resisted, and most recently on Friday, it broke that 1818 level, right? It broke the 1818 or 1819 level and traded towards the downside because of that dollar strength. Because of that dollar strength, we saw this push towards the downside. Right now at that 1808 or 1809 level, very close to the 1809 level, I'm looking at this. I'll zoom it in for you guys. Right, I'm looking at this as a level that we're going to sit there possibly for the short term and then gravitate down towards that 1800 level. 1800, a nice round number as a psychological level. Most likely we're going to see price gravitate down to that. Okay, and you can see the last time we got there was towards the end of the year last year, where it tested 1800 and then had that big strong bounce. What I would like to see, as much as there will be great trading conditions, is if price can come down, test 1800, bounce back up, break above that trend line, first signal that we could see more upside, and then after that break above that resistance as a confirmation, I would love to see this trade higher off the 1800. It would be a great, possibly a great trading setup, similar to what we saw through January towards upside. That would require a big retracement on the dollar index. Alternatively, if it goes to 1800, doesn't bounce back up and it breaks lower, then we have 1785 as the previous level, and also 17, I would say about 1765, about there, 1766, 67. Okay, those are the few key support levels if this continue or if gold continues to push towards the downside. Okay, answers your question there, AFC. Ideally, I would like to see it bounce off 1800, but I think most likely we're going to see this trade continue towards the downside, being forced down by the dollar index. With that, US yen, euro dollar, and Aussie. All right. Also, just to share with you guys is that I have actually written most of this up before. I was looking at the bullish yen. So, Jamilu, I read your mind there on the US yen view. I just wrote this about 2 hours ago. US yen pushing towards the upside. I'm looking for further upside potential. So a couple of reasons why I looked at the possible upward move. Got interested when price broke the downward trend line. So that's a downward trend line. Got interested when price broke above that. And then the first confirmation as price broke above that 23.6 retracement level, right? 23.6 there, and price broke above that point. I got confirmation. Now I'm waiting. So if you haven't got into that trade already, then now I'm waiting for it to see if it's going to break above this 133.66 level. which is also that 38.2 retracement level. Breaks above that, I think that we could see 142.20, which is that 61.8 retracement level come into play. Okay, so that's the US yen view. And also I did the dollar index, I looked at gold as well, it's all written up there. Okay, so hope that answers your question there, Jamilu, on the US yen. So this is how it looks like, a bit more zoomed in. Currently still just below that 136.65 level, looking for it to break towards upside. Most welcome, Jamilu. Alrighty, so now Euro dollar and Aussie. I'll look at the Aussie first. Here's it out. So I'll look at the Aussie first. Why so is because I'll share with you what I did this morning on the Aussie. Was as I came in, I saw this on H1 time frame. I saw this support level at 6720, about 6720. I saw it bouncing towards the up and then forcing it back down, right? Trading back down again. As it broke that 6720 level, actually I had it at about 67, yeah, I had it as a range. So about 6720, I got into a quick trade. This was, I think, on the M15 time frame, where I had about a 30 pip stop loss, and I was looking for a 30 pip take profit that way. Let me just put it on M15. Yeah, okay. So I did look at this move as it broke that level. So 16720 was about there as it broke, so it's that one there. Yep, I got in 30 to 30, 1:1 towards the downside. It came down. I think I got out at about about one something, so about that low point before it bounced back up again. So I'm glad about the Aussie there. Okay, so just sharing with you, that was my trade on the Aussie dollar. Where could it get to now? H4 time frame, big key support here at 6632, or I would say even 6630. Most likely we're going to see this come down towards that 6630 level if we're anticipating further dollar strength to come into play. I would say that we do have that downward pressure continuing on. Not a great trend line at this point. Alright, so about there. It does break out a little bit, but we're seeing this push towards the downside. I still look at this as downward pressure, looking for this to trade lower. Following on with the trend, if it does bounce, I'm not looking for any buying opportunities at this point. If it does bounce up to test, so let's say that the Aussie dollar turns up, tests this level, I'm going to look for that rejection to sell it back down towards that 6630 level. We do have some time because we do have the CPI data on Wednesday. So if you're going to get into any trades on the Aussie dollar, I would suggest, be neutral by Wednesday morning, because the CPI data, if it does come out at 8.2, 8.3, 8.5 maybe, we might see the Aussie dollar spike up. But I don't think it will be a big sustained move, right? That's why you want to be a bit neutral in the lead up to that news event. Okay, hope I answered your question there, Chris, on the Aussie, and then we'll look at the Euro. And hey, by the way, if you're enjoying the session, if you're finding it useful and informative, do me that big favor, click that like button. There are a lot of you here and not enough likes. Click that like button. Let's get to 25. Thank you. Chris, I did actually analyze the euro dollar already. It is currently trading at that 105.50 level. We are looking for it to break out of that consolidation towards the downside. Signal for that downward move will be at 1.0530. If it breaks that, then we're going to see further downside with the immediate support at 104.82 and the big key support at 104.42 or 104.40. All right. Okay. So all right. So let's look at. So Kelvin, with the question on the Nasdaq, let me see. On a daily time frame, what I'm noticing is, well, one is that as the dollar gets stronger, we're going to see the inverse relationship come into play. We're going to see this push lower. Okay, so it is at that level there of 12, but it is looking like trying to break that 12,000 level. Hasn't really broken yet. I'll consider it as an area, so just be careful. If it does break below 11,900, then we could see that push towards the downside. At this point, it's trading right at that range, so I would say, break below that 50, we're going to see some good, or 61.8 level, which is the 11,500 level. We're going to see some push towards the downside. This again could be another reason why we see, possibly on the dollar index, right? As much as I think that it could climb up, might not be a sustained move. I think it could get to that resistance level and then retrace strongly back down, similar to what happened in December, early and late December in January, because we are looking, and I don't anticipate that the markets or indices will retrace that significantly, right? I don't anticipate that I lost it again. I don't anticipate that it's going to come back down towards mid-January's level and significantly lower. So I think that if it does break 11,900, we could see it come down to about that point before bouncing back up again. Look at the dollar index to give you a good hint of where prices could get towards. All right, hope I answered your question there, Kelvin. And cryptocurrencies, Bitcoin, right? Bitcoin, we're looking at this level to trade up towards that resistance. Not only did that, it broke beyond that. So let me clear out these levels here. We do have a good strong resistance. You're most welcome there, Kelvin. A good strong resistance at 25,258. And also a good strong support here at about that 21,500. I would round it to that 21,500 level. All right, so we're looking at those two levels here. Also found most recently found that level at 23,000. Dollar strengthening does have some impact on the cryptocurrencies. We could see this retrace back down in the short to medium term. So I'm looking for it to come down to test that 23,000 level again. But you can see that overall sentiment on cryptocurrencies, or on Bitcoin especially, is that, and this is what I always mean by characteristic of an instrument, right? You can see that it consolidates, has a big breakout. It consolidates, has a retrace, consolidates, and has a big breakout. So what I'm looking for would be that consolidation here. This consolidation here, I wouldn't trade it in the short term back down. I would rather look for that consolidation at a similar level to what we saw in late late Jan. Sorry, what we saw in late Jan here. Looking for that consolidation, and then what you could do is look for that breakout potential either to the upside or downside. I would say that look at the dollar index, most likely going to be a short term down before that upward move again. Okay, what's XTI? Hope I answered your question there, Jamilu, on the BTC USD. What's XTI? Hang on. Oh, why is it XTI, not WTI? Alright, let's look at this. I have it here. Okay, US oil. WTI, it's very choppy, right? Oil energy prices are trading with a very choppy fashion at this point because it's not just on price. Previously, it was just how energy prices, production levels, right, from OPEC, and then the way the dollar is moving, you get a clear indication of where energy prices could head towards. But most recently, there has been a lot more factors coming in to oil, to WTI, and also to Brent. Factors such as, let me see if it's here. Well, this is OPEC, Russian supply disruptions, right? So a lot of it is we see a push towards the downside as the dollar strengthens, but then Russian production or threats of Russian cuts to production levels, reducing supply globally, especially to the Euro members, pushing prices back up again. And that's why you actually see big spikes down and then back up again, big spikes up and then back down again. Right? So just be extra careful. It is trading within a wide range of 73. It's a nice round number of 73, and also that 82 level. And more recently, you will see that it's also been trading between 78. I had 78 here, about 78, and also that, well, 73 level. So it's ranging within this range of 73 to 78. Every day I'm looking at this, it's just chopping and changing in directions, but no clear breakout out of those range at this point. All right, makes sense. Hope I answered your question there, Seb, on the WTI. You're most welcome. All right, so with that said, any further questions? Again, for those of you who are new to the session, thank you for joining us for the first time. I hope you had a good session. If you enjoyed the session, you found it interesting and useful, please help me click that like button. And also for all the regulars, I'm pretty sure you know what to do already. Keep clicking the like button. Question please. I see the correlation US oil, but why is oil up when US is down? Which is leading. It's not so much it's not just US and oil. It's not just US and oil that, or not just the US that affects oil. So it's all that production levels as well that we're just talking about. So it's very hard to say which is leading in particular. But what you tend to see is the dollar does lead. I mean, everything else staying constant. This is me sounding like economist again, right? Everything else staying constant. If it's just US and oil, then I would say that the US dollar does lead in terms of oil price, right? It does influence oil price in a leading fashion. You're most welcome, Desiree. Good to see you. You've been quiet. Ask a question next time. Thank you, BL. Thanks, Matt Maniac. Haven't seen a question from you today as well. Good to see you here. Alrighty, so with that, do remember, trade well, trade safe, and I'll catch you all again. Reach out and ask a question. Take care now. Bye bye.